Then the second favorite of the crowd on the internet is these days GameStop, right? I have to talk about it because there are some silly headlines flying around on some reputable, online outlets like MarketWatch. Is GameStop the next Berkshire Hathaway? Joseph Adinolfi. I don't know. You should write articles at all. Is GameStop the next Berkshire Hathaway? Okay, so I did an NVIDIA video. It probably got like the second most views in the last 6 weeks that I've done, and I got so much hate. I had more thumbs down on that video because I call these people the meme boys, bag holders. I mean, they are. And I'm going to give you guys my opinion. Who is the winner in all of this? In all of this meme boys, Reddit groups, Roaring Kitty, Keith Gill, all the jockeys, right? All the diamond hands. I see one winner in here. One and only winner in here. Okay? Is the company. The company was left for dead in 2020. Stock was $2 a share. $2 dollars. Okay? They had no future. Brick and mortar retailer going out of business because all the online gamers came around and absolutely were smashing this company. The company didn't pivot, continued with the same thing. Well, the first short squeeze happened. We know what happened in 2020. The first craziness took place. Something different happened. But what happened is that every time, GameStop went up, the company issued shares. So from having a long-term debt problem and literally losing money every quarter, bleeding cash problem, the company, with the help of the new retail investors, with the diamond hands, with the people who totally believe Keith Gill, Roaring Kitty, his plan, and we know what happened to the stock. I mean, stock went from $2 to $400 in 2020 in that craze. And then it kind of, to a smaller degree, it took place again over the last month and a half or two, right? I mean, if you don't know anything about GameStop, then I don't know. You must be hiding under a rock. So long story short, just over the last month, because of the second craze that took place, the meme stock attack and Keith Gill and Roaring Kitty buying options and shares, stock took off again. All right. When it took off, what did the company do? About a month ago, they issued 35 million shares because companies can do that. They take advantage of a high stock price and then issue shares and collect cash. Somebody bought it, 35 million shares. On the last leg up to the 60 level, company sold another 75 million shares. So this company, with the help of the little guy, retail investor, who most likely got hurt in all of this overall. Yes, Roaring Kitty made 53, he ran his 53,000. Now he owns 9 million shares of GameStop at $25. That's 200 million. He ran his 53,000 into $200 million. But every time the stock went up, company issued shares. Company has 425 million shares outstanding now. However, from being a dead as a doornail company, now that's why I think the article came in comparing it to Berkshire Hathaway, because Berkshire Hathaway is sitting on $187 billion in cash, right? The company, from not only they paid their long-term debts down, now the company has zero debt and about $4.5 billion in cash. Now think about this. What could be done with that $4.5 billion in cash, right? So the retail, the little guy, the diamond hands people, the people who bought the shares and are holding on for dear life. Now, my opinion, stock is about 25. There are 425 million shares outstanding. The odd thing is, there are still people shorting the stock, betting that it's going to go to nowhere, right? Here's the deal, though. Not too many institutions own the stock. Mr. Cohen, who's the CEO of the company, owns about 10% of the shares. The people, the little people, we own about 70% of the shares. And a lot of people say, I swear to God, I'm never going to sell it until it goes to $1,000, which I don't think it will. But institutions own very little percentage of the company because people who ever bought the shares are just holding on to it, and they're not allowing it to be lent out to short. Well, there are still shorts. There are still massive, well, not as massive as in 2020, but there are still, in 2020, by the way, it was over, the stock was shorted by 110%. Think about it. There's 100% shares out there, 110% was shorted. Now, if you look at the short interest, as of the 15th of this month, actually, we're sitting at about 70 million shares short, which is still quite a bit. And out of 425 million shares, you're looking at about 15-18% of the outstanding shares are shorted. Is it going to be another short attack, and is it going to be going double, triple? Probably not. But here's the fundamental part. What should they do with that $4.5 billion in cash? $4.5 billion in cash, by the way, on 420 million shares outstanding is $10 in cash. Stock is $25. Now, out of the $25, $10 in cash, no debt. Look where the company is at with the help of the little guy, okay? And who's the winner? The company is the winner, ultimately. So $10 is in cash, $15 is enterprise value, all right? Is the company worth $15 extra above its cash value? I don't think it is, because there is still an antiquated business with brick and mortar, selling video games and Nintendos and PlayStations and whatever. That's a dead business, right? The brick and mortar business is dead. But now they have a war chest of $4.5 billion. What should they do with that? Should they go the Michael Saylor way, who is the second genius that I like on this planet beyond Elon Musk? Should they go buy Bitcoin? Just like, actually, Michael Saylor just borrowed another $700 million, bought another 12,000 Bitcoin a couple days ago. That guy is just borrowing money and buying Bitcoin. That company is either going to go to the moon when Bitcoin goes somewhere, or it's going to zero, because he has so far borrowed $3 billion on convertible bonds and bought Bitcoin with it. What should GameStop do? Should GameStop buy another company, maybe an online company, maybe get into a different business? Now they have the firepower. They have $4.5 billion in cash sitting on it. Or should they go do what Michael Saylor is doing with Bitcoin? I think part of it probably should. I'm not going to give advice to GME board of directors. Or should they park it in treasury bills at 5%? If you put the $4 billion in cash in 5%, $200 million a year. Well, they are losing $35 million a quarter. Or should they shut it down and return the cash to the shareholders? Should they go buy another company in the online gaming business? I mean, look what the retail trader has created for this company. A dead as a doornail company has become $4.5 billion cash-rich company, which is a great problem to have these days, by the way, right? And they have operating losses, right? So what should they do? What do you guys think GameStop should do with that $4.5 billion? I think it's going to be very interesting to watch. Is it against short squeeze candidate that's going to go to the moon? I doubt it. Would I buy the stock in itself at $25? No, because I don't think the enterprise value is there. Is it going to go to the cash value to $10 a share? Probably not, because it's just too hyped. It's not going to happen. But I think I honestly, I think if the management listens to anybody, are they a Berkshire Hathaway? Of course not. But they have a cash hoard that they can actually do something with. $4.5 billion is a serious amount of cash, and it only happened because of the small investors believing into this company and bringing it back from absolute dead. So something I'll keep following. It's interesting to me. Is it worth 25? Probably not. Is it going to go to 10? Probably not. Would I be a buyer? I'll probably buy like maybe $5-6 above cash value. give it a little bit of an enterprise value. Not that these stores are not selling; they're still selling. They had revenue of like 900 million last quarter, but they're losing money. The margins are not there. So kudos to the retail investor. One for the good guys. They saved the company. Now they have $4.5 billion to play with, and good luck to them.